Good afternoon. Today is Monday, the 15th of November, 2010, and the market's closed here. We still have some short-term indecision in this market as it's trying to hold on to that rising 20-day moving average on the SPY. But when we look at a 10-minute time frame, we still have a pattern of lower highs and lower lows intact here. Now, today we didn't make a lower low, but if we take out this low from last week, tomorrow near about 119.65, then it will be intact. Best case you could make here bullishly near term is that we're turning sideways. But until we have a higher low and then a higher high and we break back above that 5-day moving average, it remains a smart thing to be very defensive overall in this market. It's of course very extended to the upside, and some digestion of the gains is still something that I think is healthy for this market. So we want to just maintain that defensive posture, I guess. The Nasdaq, for its part, if you take a look at what's really been the essence of trend, drawing a trend line off these lows here, we're right on that trend line. We did close below the 20-day moving average for the first time since getting back above it back in here at the beginning of this rally in September. So that is worth noting. And the 10-minute time frame, also here on the Qs, is a pattern of lower highs and lower lows. So we'll be wanting to look for important levels for this market to hold, such as really $52 a share. The bigger level, though, that I had mentioned over the weekend is really 50 and a half. That 50 and a half level is really where we would expect to find the bigger area of support, and you can probably see that a little bit more clearly. In fact, you can on the weekly time frame when we take a look here. That was this resistance that we had broken a couple weeks back, and it's also right now approximately the location. 50 and a half is approximately the location of that 50-day moving average as well. So if we're to see a little bit of a flush out here, I think that 50 to 50 and a half area would likely be the level where buyers would show up. Now, over the weekend, I had written an article for SFO magazine, and we spoke a lot about the financials, about how they were going to be an important group to watch going forward this week. So far, they can't, they haven't gotten back up and given us a reason to buy. We were observing this two-thirds retracement level in the Fibonacci, based off of the lows prior to this as this market took off here to the recent highs. We've come down, tested that two-thirds retracement, the 61.8% level, and what we were looking for in terms of important levels were first $15.20 and then $15.35. We were saying that above $15.20, it would be nice to see it kind of stabilize there, build some energy, and then push through $15.35. And above $15.35, I think we could give the buyers the benefit of the doubt once again. But until then, it remains too mixed to really take a stand here on the financials. We're at an important spot on the daily time frame. It shouldn't have, in my mind, broken below that 10-day moving average, so that's a negative sign. And we're right at that the 200-day moving average as well, down at about $14.85. So if we break back through probably 1480, I think getting back below 1480 is likely to be the trigger for a bigger pullback in the S&P 500 and in the Nasdaq as well. So those are going to be the important levels to watch. It's not an encouraging sign to see that the home builders have fallen definitely back into the range. They've broken below that what was prior resistance, failing to hold as support here on this little pullback after that rally, and we've got lower highs and lower lows with a declining 5-day moving average in there as well. So short term on all these markets, I think you have to be defensive. That would include the metals, which are still on daily time frames in uptrends, but we've got these lower highs and lower lows below a declining 5-day moving average, which suggests that we continue to be cautious in here near term until this market can regain its footing and break free of this pattern of lower highs and lower lows, get back above that 5-day moving average, and then once and if that momentum returns back to the upside, then the next leg higher is likely to begin.